Welcome back to Medical Economics Practice Academy. I'm glad you decided to stick with us. We've got another really good presentation coming at you. Our next one is called Unlocking Financial Independence, Strategies to Help Doctors Retire on Their Own Terms, something everybody wants to do. This program is sponsored by Earned Wealth. Just a reminder that we will have some time after the presentation to answer any audience questions. And that if you have a question, click the Ask a Question button, type in your question and click Submit, and we'll get to as many as we can before we run out of time. So let me introduce you to our next group of speakers. We've got first a couple of physicians. We've got Dr. Nestor Karras, who's an oral surgeon, Dr. Alfred Atanda Jr., who's a pediatric orthopedic surgeon. We also have Bill Martin, who's the Chief Wealth Officer at Earned Wealth, and Nick Gizzarelli. I screwed it up. I'm Italian, and I screwed up an Italian name. He's a partner and retirement plan specialist with Thomas Dahl. So let me tell you a little bit about these folks. Dr. Nestor Karras is an accomplished oral and maxillofacial surgeon, spent part of his career as an assistant professor, teaching full-time before transitioning to private practice. He continues to lecture to local doctors throughout the Diablo Study Club, demonstrating his passion for education. At Mura Oral, Facial, and Dental Implant Surgery, Dr. Karras and his staff provide advanced treatments to enhance patient smiles and oral health. He is a diplomate of the American Board of Oral and Maxillofacial Surgery and the National Dental Board of Anesthesiology. And he's an active member of several regional and national professional organizations. Next, Dr. Alfred Atanda Jr. is a pediatric orthopedic surgeon at Nemours Children's Health in Wilmington, Delaware, where he serves as the chief of the Center for Sports Medicine, the director of clinician well-being, and he's also an assistant professor of orthopedic surgery at the Sidney Kimmel Medical College at Thomas Jefferson University. Aside from his clinical practice, he has been working to promote professional satisfaction and practice sustainability for physicians and clinicians, bringing awareness to the many ramifications of physician burnout, lack of well-being, and physician suicide. He is responsible for vetting and implementing systems-level digital solutions to reduce physician burnout related to documentation burden, external regulatory constraints, and clinical workflow inefficiency, which are all topics that medical economics readers will be very knowledgeable of. Bill Martin, I mentioned he is the Chief Wealth Officer at Earned Wealth. He specializes in tax-smart investing, private investments, and tax planning for doctors. He authored The Smart Financial Advisor and has been a guest contributor on The White Coat Investor, The Prudent Plastic Surgeon, Medical Economics, The Art of Medicine podcast, and Wealth Tech on Deck podcast. He has served on a number of industry advisory councils, including JP Morgan, Fidelity, American Bankers Association, and iCapital. Last but certainly not least, Nick Gizzarelli, who has been with Thomas Dahl since 2010. He is a seasoned expert in qualified retirement plans and other tax-advantaged retirement savings vehicles for medical providers. He focuses on individuals from private practices, medical groups, MSOs, DSOs, foundations, and hospitals. Nick is a member of the American Society of Pension Professionals and Actuaries and the National Association of Plan Advisors. So, Drs. Karras, Dr. Atanda, Bill, and Nick, welcome, and the floor is all yours.
Thank you, Chris. Prepping for this webinar, I was reflecting on a couple of different scenarios. The first was the time I get to interact with a number of doctors that are clients that have chosen to continue working just simply because they love practicing medicine well into retirement years. But I contrast this in situations that just often really do pain me, where I see doctors that are in situations where they're having to continue to work because they have to, not because they want to. And this topic right here around unlocking financial independence is so crucial. And what we're going to be focusing in on are some strategies and stories to help doctors like you retire on your terms. Here are a few disclosures, and rather than simply skipping past this page, I wanted to highlight a few things. First, this presentation is meant to be educational. We really, truly hope that you walk away having gained some new knowledge and some insights that you can put into application. And then secondly, Earned Wealth, as well as Thomas Dahl, are both SEC registered investment advisory firms. That means we're fiduciaries, putting our clients' interest first. You've heard the bios of my esteemed colleagues and doctor professionals that are on this webinar. Look forward to hearing them as we move through this presentation. The first point that I wanted to highlight is here's what we do hope that you learn and the topics that we're going to be covering. One is to unpack the challenges that are faced by doctors in achieving financial independence. It's important to understand what these roadblocks are. And then secondly, we're going to take a deeper dive into specific strategies to help boost your retirement savings. This is an area that Nick's going to take, and pleased that given his sets of experiences and professional insight will really help us to understand the importance of these various strategies that are there. And then we'll turn to the financial lessons learned by the doctors that are on this call, and look forward to hearing their stories and wrap this up with some additional strategies to help unlock financial independence. So Dr. Atanda, we're going to start with you, focusing in on these challenges that doctors face in this concept of physician and money. Can you speak to some of these stats and maybe a few other insights on this particular slide and topic?
Yeah, thanks, Bill. One of the things as the director of physician well-being at our hospital that we kind of focus on and try to emphasize, not just in terms of physician burnout from the individual perspective, but we do like to highlight that, burnout is mostly a systems level problem that unfortunately manifests in individuals. And it's not something that's the individual's fault or problem. And we try to really understand how the system and the experience of the physician can account for that. And, you can see some of the stats here. There's an overwhelming amount of physicians in most categories, probably at least half to 2/3 or 3/4, of physicians have different issues related to burnout. And when they talk about the stressors, obviously a lot of it is clinical in nature. But you can see here, half of the physicians talk about money and financial issues being a significant source of stress, and also not really being sure about how long they're going to stay in their practices. A lot of that does come from financial issues and problems. When we think of finances and money, one of the issues that a lot of physicians face is most of the money and revenue that we generate is done in an active fashion. And we tend to trade our time and our energy for financial security. And in and of itself, that sounds like a good idea, right? You're being conscientious and you're being careful with your finances. But one thing that you'll quickly realize is that you only have a certain amount of time and a certain amount of energy in the day. And it's this point when you realize that you can't trade in any more of your time and your energy for more money that burnout starts to set in. And I think the biggest factor is that feeling of hopelessness and that feeling of being locked in and being shackled to your job. Because, like many people, there are a lot of other things that we like to do with our time. But since so much of our time is dedicated to making money, we don't even really have a lot of time and energy to enjoy the money that we're making. And it turns into, kind of this vicious cycle. So when I first started this role in as a well-being person for physicians, I was so focused on the clinical aspect of things. But as I learned more in this role, I realized that finances play a huge role and serve as an enormous backdrop and foundation for the epidemic of physician burnout in this country.
Thank you, Dr. Atanda. And you talked about what financial independence didn't look like, some of those stressors and the burnout that's created. But this quote right here from Morgan Housel, he's the author of The Psychology of Money, really, to me, represents what financial independence is. It's the ability to do what you want, when you want, with who you want, for as long as you want. And then that pays the highest dividend of anything that money can buy. And I think this quote represents so well what we're talking about, this concept of financial independence. Let's now transition to taking a look at some of the strategies and the tactics to help boost your retirement savings as a doctor. And Nick, I'm going to hand this over to you to walk us through this really important slide right here and some of the next couple slides that follow after this.
Thanks, Bill. Yeah, so one of the things that we've talked about so far is financial freedom and retirement and the freedom that comes with earnings, right? Money. You trade your time for earnings and savings so that you could have the financial freedom. Generally, the largest bucket of liquid net worth of investable assets tends to be a retirement account for physicians, for dentists, for doctors in general. And so this is a very important topic that I wanted to get a little bit more technical on to talk about, because there's one, it's very important for business owners, employee physicians, associate physicians, independent contractors, you name it. And two, and there's a little bit of confusion here as far as there's a lot of different options. And so what are my options as a doctor as I go through from residency to retirement? What are my savings vehicles available? And so this is broken into two columns here. You'll see employer-sponsored plans on the left-hand side and self-employed options on the right-hand side. And in many cases, the options are the same. The question just becomes, who is in control of the plan design? So as an employer-sponsored plan, this means you as an employee of a medical group, of a dental group, or of a partnership are limited to what the group provides as a benefit plan to the staff. And so that could be a 401k or a 403b, or in some cases a 457. There's also a couple other options out there that on the other side that are available as well. But these three options are the end goal. And across all three of these options on the left, with 401k being the most common, there's always two pieces to the retirement vehicle. There is the part that you can save as a deferral, as a salary deferral, how much you can save yourself by deferring some of your earned income to a retirement plan, the benefit being that you avoid taxes today to pay later. And then there's an employer piece. What part is the company, the group, the partnership funding to the retirement plan on each clinician's behalf or each employee's behalf? And so each of these options, it will depend on whether or not you're working with a hospital, a foundation, a for-profit private company. They have very similar strategies and end goals, meaning these two pieces together can generate significant annual pre-tax savings for individuals. And when I say significant, we're talking in the range of $60,000 to $70,000 a year of deferred income, meaning it's taken out of your W-2 and put into the retirement plan directly. These benefit employees, physicians, clinicians at the federal and state level, which is why these are very popular, especially during peak earning years for clinicians. On the self-employed options, this is for independent contractors, those who own a private practice, or maybe a small partnership with just a small number of decision makers. Oftentimes you work your way from the top to the bottom here, simple, SEP, 401k, and then cash balance, because the contribution limits increase as you work your way down this table. As a new physician starting up or a new doctor starting up, you may not have the need or the cash flow to save more than maybe $15,000 to $20,000 per year. So because of that, you may consider one of those first two options there that allow you to put anywhere between about $16K per year or up to 25% of your earned income, whether that's a W-2 or a K-1, depending on your tax structure. Once you start to get into your peak earning years, you'll start to feel the pain points of the tax bill at the federal and state income level. And this is generally where when I talk to doctors and they say, look, 16% is just not cutting it. I have my colleagues over here are putting away $50,000, $60,000, $70,000. What should I be doing? And so that's when a full 401k comes into play, where the clinician is putting away the maximum of their 401k, which is about $23,000 per year of their own dollars. And then their company is making a contribution, usually about double that, to get them to about $70,000 total. And this is a great vehicle that is very, very highly utilized in the medical dental space because it's fairly straightforward and the benefit is significant. If you're paying 35 cents on the dollar at the federal level and 10 cents on the dollar at the state level, especially in high state income tax locations, every dollar you put into a qualified retirement plan is potentially 45 cents in tax savings, right? So that is the strategy here, is a tax game to how can I save for my own financial freedom while maximizing my tax benefit today. Then for those of you who are in your peak earnings year, you say, you know what, I'm ready to supercharge for a certain amount of time. The last option there is known as a cash balance plan. Can double, triple, and in some cases quadruple the amount you can save on a pre-tax basis. We're talking potentially a couple $100,000 per year that a medical group could put into, or a dental group could put into this type of retirement plan. And I can't explain it in 2 minutes, but that is kind of, once you've gotten to that level, you are in full force commanding your tax and income planning, which Dr. Karras, I think, will speak to here in a minute. Is a great option for physicians and dentists, whether self-employed or part of a group. And so as we go through here, just a reminder, if you have questions, feel free to throw those in throughout the presentation, and we will address those either at the end or as we go here. So taking these tools, right? So I described 4, 5, 6 potential different tools. And the question is, how do these fit into building successful retirement plan, or retiring with finesse is what we like to say. And so to do that, first thing is, this quote here is a fantastic kind of segue into what's next. Financial freedom, you only know what you know, right? Or you don't know what you don't know is the glass half empty version of that. Well, here, financial freedom is available to those who learn about it and work for it. So the goal is here, learn about the tools available to you. So that way, you know how to work towards the financial freedom that is the ultimate goal here. And so I think with that, I want Dr. Karras, I would like to hand it over to you to spend a few minutes kind of talking about your roadmap that you have already built and experienced using some of these tools, and maybe other insights and experiences that you've had along the way here.
Sure. I appreciate that, Nick. Thank you. And of course, I do agree with Dr. Atanda. I think that.
And Dr. Karras, I think, are we having a mute? Or do you have a private mic on mute potentially?
Can you hear me now?
I can hear him.
Yeah, Nick, I can hear him.
Okay.
Yeah, so thank you, Nick. Again, Dr. Atanda is, I think, exactly correct, and that is provider burnout is a real thing. And it's, I think, a lot of times directly related to financial stability. And of course, you really can't have a successful practice unless you have a successful financial plan that's working for you and your family. And I think that's really what all of this planning is about. So my situation, I think, was very similar to many clinicians that finish, postgraduate education, residency, and then go into a variety of different practice arenas. I spent 13 years in postgraduate education between 2 professional schools, residency, fellowship, and then when I finished, went to full-time academics for 4 years before I finally decided to go into private practice. I've been practicing now as a solo practitioner, just now entering into a partnership with a new doctor for the last 23 years. And so when I finished and went into private practice, finished academics and went into private practice, I felt that I was behind in terms of my retirement contributions. I felt that I wasn't putting enough money away, or hadn't put enough money away into that time period. And that's where Thomas Dole was very helpful in helping me develop a planned approach to trying to catch up and then create a time period for where I could successfully transition out of practice and retire. We first started out with a typical 401k plan. We added, the Roth IRA plans as we went. But again, there's a limitation in terms of how much money you can actually put away in those plans. I practice in California, a high-tax state. So if you're not trying to connect your retirement plan approach to improving your tax strategy, that I think you really, you're really leaving things on the table from that standpoint. So after a few years of the 401k, we added the cash benefit or defined contribution plan. And that added a tremendous amount of flexibility in terms of how much money I could put in pre-tax, again, trying to reduce my taxable burden. And then along with that, we also added, my wife was an employee in the practice, so we were actually able to leverage that as well. So not only could I put money in, but she could as well. And that's, it dramatically improved the amount of pre-tax income that we've been able to shelter and provide for us in retirement. So at this point, I'm 62, I plan on practicing another 3 years, maybe 4 at most, before I retire. And I feel comfortable with what we've done with both of those combined plans. The other advantage for me is now I'm transitioning, I'm selling half my practice to a partner. And in that, I'm going to get a payout. Of course, I would pay excise tax and state tax with that, but now I'm going to transfer that amount into the cash benefit plan, and again, defer that taxable amount until after I retire. So it's given me, having both those plans, given me a tremendous amount of flexibility moving forward.
Yeah, and I'm glad you hinted on that, or you mentioned that last one, the redesign bullet on the slide. That's actually an active planning stage for you, and could be beneficial for many private practice owners as they look to navigate what a practice sale or transition would look like. You know, there's the potential for earned income as you continue to wrap up your practice, but also a windfall or a one-time hit of capital gains tax and revenue. So that cash balance plan is a very valuable piece from a transition planning standpoint as well. You did mention briefly on there about the IRAs near the beginning there, and just wanted to clarify on that. And what we're talking about is the backdoor Roth IRA, which is additional savings that's outside of the 401k, outside of the cash balance plan that we've talked about thus far. Not going to go too much into that, but that is definitely a strategy that I think all clinicians should be looking at, if regardless of their stage in their career.
Yeah, thanks, Nick, so much for really highlighting some of these strategies. And I think the classification of whether you're an employee or practice owner or 1099 is really useful in thinking what that would what strategies are available from a retirement plan perspective. And Dr. Karras, I really appreciate you opening up and kind of sharing your retirement journey and the ways that you've been able to really set yourself up for the opportunity to, what you were saying, retire kind of on your terms. And it's exciting to hear that story. Now we want to transition and talk just briefly about a few additional things outside of the retirement plan that can continue to boost earning potential. On this slide, there's 6 different items that are highlighted. I'm going to pick 3 of them, and there's a lot more that, as practitioners working with doctor clients, that we deploy to really help achieve that financial freedom and independence. The first one I wanted to highlight was the importance of developing a financial plan. I think that I see this as the blueprint. It's the strategy by which you accomplish those things that you're really want to do from a financial perspective. And without that plan in place, it becomes very difficult to achieve those objectives in a systematic way. The second item on here that I wanted to call out was this concept of investing in taxable brokerage accounts. And related to this is this idea of tax diversification. So we've been talking a lot about putting money away on a tax deferred basis. So it's not taxed now, but taxed when those dollars begin to come out. In this case, these dollars have already been taxed and can continue to grow in a different way, in a way that diversifies, call it the tax burden on these particular accounts. And this is just another important strategy to layer in. I think of it as tax diversification. And related to that, the third one I want to call out, and Nick touched on this too, and it was in Dr. Karras's outline of strategies that he put in place, but it's this concept of exploring the backdoor Roth IRA, or potentially even a mega backdoor Roth, that are strategies to further build that tax diversification by putting in place the tax-free bucket. So by having dollars allocated to tax-deferred accounts, taxable accounts, and tax-free accounts, it provides a lot more flexibility for you when you begin to create strategies in retirement of which accounts are best to source this. It can extend the longevity of the portfolio, and it's a really smart way to also further enhance the wealth creation capabilities. Now, Dr. Tonda, this next slide, I know you're going to speak to. It's a bit of an eyesore. Why did you like to put this one on?
Well, in my travels as a working with a lot of docs and looking at burnout and well-being, whenever the topic of finances pop up, it's kind of like this old cluttered attic or this basement that you can see here. I think a lot of folks, me included, just get very overwhelmed. You just see so much going on and you don't even really know where to begin. You don't have the appropriate tools that are needed to really figure out your financial situation. I mean, I can speak for myself, going through many years of training. Nobody ever really sat me down and formally talked to me about finances. And it can be a very overwhelming idea. And it's so much easier, just like with this cluttered attic or basement, just to shut the door and try to forget about it. Out of sight, out of mind, right? But we know that that's obviously, avoiding your problems is not the best way to deal with them. And I wanted to share with you just my own personal journey. And all physicians and clinical providers are different. We are not created equal. Even myself, I'm very different than Dr. Karras. I actually practice at Nemours Children's Health in Wilmington, Delaware, about 3,000 miles from him. I'm a little bit earlier on my journey and not nearly as experienced. I'm only 45 and I've been in practice. This is my 13th year. And when I first started, I went through the motions just like any other nerdy academic surgeon. I saw my patients, I did my procedures, I did research. And then in 2016, I got divorced and everything changed because I no longer could just work as long as I wanted to and stay in the OR till 7, 8 at night. I had 2 small kids at the time. They were 6 and 3. And I quickly realized that from that point on, every time I was going to be around my kids, it was literally just going to be me taking care of them. And I had to figure out different ways that I could not only generate the same amount of revenue, provide value to my organization that I worked for, but also be a dad at the same time and maintain, all of my personal interests and everything like that. So I really had to figure out a way how to diversify myself financially because I couldn't just rely on making money as a surgeon because it took up way too much of my time and energy, as I mentioned earlier in the webinar. And one of the things that I've mentioned to a lot of physicians is that, we have to realize that we have so much knowledge and experience and expertise swirling around in our brains, but we don't really know how to get it to where it needs to go and to be compensated for it outside of the traditional way of seeing patients, doing procedures, and interpreting tests. And I discovered that there are lots of different ways, actually. A lot of those ways are kind of centered around being an independent contractor and kind of shifting some of your income from W-2 to W-9. And for us, utilization review management, telemedicine, e-consults, second opinions, all sorts of things that we can do. And I started dabbling with these things in order to diversify myself financially, And that's when I came across Earned, right when I was in the thick of all this, because now I had a lot of extra, not extra, I wouldn't say, it was different diversified income. The amount of money I was making was the same, but it was now in different pockets. Think of it as like a pie chart, and it was split up in many different ways. And you can see here kind of my journey with Earned and having an advisor sit me down and figure out how things worked in my particular situation. And understanding that every situation is different, understanding that the needs of all physicians and docs are different, and they change, right? Like I said, when I started off, my needs were, in a certain way, in a certain package. and life happens, and what I needed to do financially changed. So understanding that everybody has their journey, everybody has their situation, and really connecting with like-minded folks in the financial industry to help guide you along that journey can not only help you maximize the amount of income that you make and allowing you to work smarter and not necessarily harder, but it can also relieve a lot of that stress that we feel when we open that cluttered attic or that cluttered basement and don't know what to do. Taking things piece by piece in a strategic way with those in the industry can be very helpful. And that being said, I wanted to kind of wrap things up and highlight overall what we've been talking about, and understanding that you as a physician, you probably are feeling a bit overwhelmed and a bit scared because you're out of your comfort zone. You were never appropriately trained and given the tools that you needed to really navigate the financial world. But hopefully this webinar has provided some insight, some examples, some real world examples of real people in the financial industry, as well as in the clinical realm, trying to understand how best to maximize what they're doing and work as smart and as efficiently as possible. So hopefully with the last several minutes that we have here, we can kind of take some questions and dive into concerns that people may have and help address some of those ideas that people have been thinking about during the webinar.
Yeah, thank you all. I want to thank the panel and the folks from Earned Wealth for a great presentation. Thanks so much. So now we will jump into a Q&A segment. First off, a reminder to the audience, we still have time to take your questions. So go into the Ask a Question box, type in your question and click Submit. We will be monitoring as we sort of wrap up the Q&A here. So please, if you have a question, feel free to ask. Let us get going then. What I'll do, folks, is I will just toss the questions out, and then whoever you all feel like wants to take a crack at them, we'll do that. So obviously Nick shared a number of the retirement plans that were available. So I think that that's sort of germane to this question. And that's, if I were to open one type of retirement plan, could I later switch to a different plan type?
Yeah, that's a great question, in that, yes, absolutely, there are strategies and timing as to when you would navigate or graduate, I like to say, from one to the next. But on an annual basis, if you were on fire and just moving all over the place and growing and diversifying your income, as Dr. Antana was suggesting, yes, each year you could start with a simple, next year graduate to a SEP, next year graduate to a 401k. If you had independent contractor income over here and you were an employee of a foundation or a group over here, you could actually participate in both within limits. So yes, it's very flexible. There are obviously rules, so definitely make sure you're talking to your tax or investment or retirement advisor. But yes, absolutely, you could switch.
Okay, great. Thanks for the answer. So, a lot of people, think that investing is something, especially like right now, you can download an app and get investments anywhere. So, why should I hire an investment advisor versus investing for myself? That's the kind of the thrust of this question. So, what are the benefits of an advisor? And I know we've kind of covered some of them in this presentation, but I'm not sure who wants to take that one to kind of talk about, the importance of a professional help with this.
I can go. I mean, for me personally, I had no idea what I was doing. I'm a smart guy. I can read books. I can read Investment for Dummies or something like that. But if I was going to go out and buy a house or go out and buy a car, you're going to have a realtor or a car salesperson help you with that same thing. Obviously, you can kind of navigate through the weeds and try to do things on your own, maybe try to save money so you don't have to pay somebody. But I think that's kind of silly. I think we have a lot of blind spots as physicians. We have a lot of gaps in our knowledge, even though we like to think we're the smartest people on the planet. There are a lot of things that we don't know. And leaning on a financial advisor can be very helpful in the sense that it makes sure that you do the most with the money that you're making. But for me personally, it just takes a lot of that cognitive burden and stress off the situation, because I know that there's somebody in my corner doing work in the background, helping my investments and my portfolio, and that there's somebody that I can always rely on and count on. I can get to folks via text, via email, via phone call, and just having that comfort of knowing that it's not all on me to really manage my finances, at least for me personally, was huge. And it was definitely worth the money of hiring somebody to work with me, because most physicians have so much on their plate, specifically if they're parents, if they have hobbies, side hustles, other things that they're doing. Having somebody that's knowledgeable and experienced take that off your plate can be huge.
So this might be a good question for the doctors on the panel, and that is, as you are considering your options of who to bring on to help you with these financial decisions, what were some of the considerations that were most important to you in those times?
Well, I'm happy to discuss that. So in my situation, I was, basically self-employed running my own business. So having Thomas Dole help with the accounting aspect, as well as the development of the retirement plans, because again, your employees are involved with that as well. It would be an extremely daunting task to do that by yourself. There's so many federal regulations involved with that. These plans have to be managed by professionals. The other issue is, the other side of it is the issue of wealth management and investments. And I think in order to really be a good investor, you're going to have to put a lot of time into that. And the question is, do you really have the time by the time you look at what you're doing in your practice, your family, your personal life? And the other thing you have to look at is also fees that you're paying for those investments and buy and sell in particular. So, many companies like Thomas Dole and Wealth will be able to provide a better, more economical portfolio for you, reducing the fees, and it will probably be able to give you access to investments that you as an individual investor would not be accessible to. And so I think that's a huge advantage. Plus, just having the advice of, gee, I need a new insurance broker, or who do you recommend? Having that is also very helpful, particularly when you're running your own business, because you waste less time trying to find good people to help you along those lines. So I find that it's been invaluable for me.
I'd like to add to Dr. Karras's words of wisdom. For me personally, the biggest thing that I liked about looking for financial advisors, I needed somebody that was available and flexible. A lot of times you have a financial person or some other advisor, maybe a lawyer or legal person, and they try to schedule meetings in the middle of the day, and all the times when you're in clinic, when you're doing procedures, when you're seeing patients. And having somebody, at least in my experience at Earned, having young advisors who are on their phones, on email, very approachable, flexible, reachable when you need them, was huge. Obviously, I'm glad that they're experienced and knowledgeable, but having people that are available and flexible when it's most convenient for you was the biggest selling point for me.
Okay, great. Thanks for sharing both of your thoughts on that. I think we have time for one more question, and that is, obviously a lot of physicians have, retirement plans that are associated with their job. But how important is it to have a retirement, options and portfolio that goes beyond sort of that employer-sponsored plan? And what are some of the strategies that should be considered when sort of approaching those other, investment opportunities?
Yeah, Chris, I'll take that. And I did hit a few in the presentation, but there was a lot that I didn't as well. And I would also echo what Nick said. Like, this is a great way for doctors through the retirement plan to maximize that. So don't miss that opportunity. So I'd start with that. But then there's ways to layer on additional wealth. And one of those that I think I would call out is Dr. Tondo, you referenced diversifying the type of income that you're generating and moving some of that from W-2 to 1099 or contractor income. And that gives you the opportunity to do a lot more from a tax planning perspective. Won't go into all the details there, but that might be something that some of the doctors on this call would want to explore, to consider. And I think in addition, it would be this concept around how do you integrate across the entire financial plan, things like investing, tax smart investing, the ability then to look at things like estate planning and protection of assets and income. Those are all really important decisions, and partnering with a financial expert who's a fiduciary is a really important consideration that's a part of that.
All right, I think that's all the time we have. I wanted to thank everyone on the panel for the great presentation. Dr. Karras, Dr. Atanda, Nick, Bill, thank you all so much. And for the folks at Earned Wealth for taking part today. We really appreciate it.
Thanks, Chris.
Thanks, guys.
Thank you very much. Thank you.
All right, we've got one more session for you that will be coming to you here in a few minutes. So please stay on the line and we'll be right back on air in a second. Thank you very much.